Welcome back. As promised, let's get chatting with the management of Rajratan Wires. Now, an interesting move on the stock price. Remember, from earlier highs, we did see some correction in the stock price, and thereafter from the lows this morning, in fact, it's picked up quite some steam. The stock is virtually at the high point of trade with a gain of almost 3.5%, having recovered over 5% from the lows itself. The second quarter numbers were rather, on the back foot of, what the street was anticipating, and that's primarily because of a couple of factors that the management did allude to. Let's talk about each of them. We have with us Mr. Chordia. Thanks a lot, sir, for joining in. Always a pleasure speaking with you. The first question is that after your second quarter numbers, just wanted to understand, will you go ahead and do that 1,15,000 tons in terms of volumes this year itself? Because you have said that, you've initiated some planned shutdowns to streamline your inventory, etc. What happens to your volume guidance for the second half of this year?
Mangalam, you are right. The Indian business is going good. There are not major problems, but we are hit by the, global recession in Europe and America, and volumes are affected because of that, especially in our Thailand company. Thailand company is more exposed to this, and the volumes for this year may not be as projected earlier. We'll be doing a growth of around 7-8% in volumes this year. Thailand may remain flat. India may grow around 10%. So now the new guidance will be close to 97,000-98,000 tons of volume.
And the breakup for that in India and Thailand would be what?
Thailand will be flat as we had done 35,000 tons last year. So we'll be able to do that, and India will grow by 10%. So from 55,000 tons to something like 61,000-62,000 tons volume in India.
Okay. Yeah. Is there any downside risk to your estimates in Thailand, sir?
I don't think so, because we are, this is after calculating the risk. Yeah.
Okay. And in terms of demand, when it comes to India, can you just highlight what exactly the growth is looking like in terms of clients? Because we do understand that you do supply to some big clients in India. Is there any sort of disruption in demand simply because, we are working with a high interest rate environment? There could be possible rate hikes coming in the future as well?
Yeah, we have considered all that risk. Till last quarter, we were not able to, supply our customers on time. But in Q2, we could do that, and we are left with some inventories also. So we have recalibrated the demand, and going forward, we will also have competition with imports coming into India, which were coming because we were not supplying on time. So now going forward in next two quarters, quarter 3 and 4, Indian business will do well. We are sure about that.
Right. And that's interesting because, you are increasing capacity both in India as well as Thailand. Just wanted to understand your thoughts on the margins itself. In fact, EBITDA per ton on an absolute basis, because you've also planned to, procure materials locally to mitigate the risk of fluctuating currency rates. Just wanted to understand what kind of impact has the currency had on you in terms of basis points, and going forward, what is a sustainable margin level or EBITDA per ton, whatever you're comfortable giving us?
Yeah, margin goes down if the volumes are reduced.
Right.
Okay, and I have always said that 20-21% is not a sustainable margin. I would always, plan with 18% EBITDA margin, which is sustainable. And, when the volumes go down, our cost also goes up. So that is the reason for lower EBITDA percentage in Q2.
Okay. You did have some amount of high cost inventory that in terms of raw materials that you were sitting on in this quarter. And that is one of the reasons your margins also probably got impacted. Can you tell us if that has already liquidated? Are these external elements probably going to impact your margins going forward, and hence what would be a sustainable range that you would probably see in the second half?
Yeah, we always have a time lag between the price corrections. We buy raw material on a monthly basis and we sell to our customers on a quarterly basis. So most of the inventory correction has happened. So in Q3, we won't have a negative impact of the inventory cost. But as I told you, 18% will be a sustainable margin I'll plan with.
Right. Mr. Chordia, two-part question. One is on your market share. On the one hand, we have seen you increasing your capacity. Secondly, a lot of local capacities are shutting. So what does your domestic market share stand at? What does it go once, all your capacity increase is taken? And secondly, Michelin, you've been talking about them being empaneled as a client. They've now come on board as a client. How much do they add in terms of orders? When does the first order come in?
Michelin is not a very big customer in terms of volume, but their quality requirement and getting approval from Michelin gives a lot of learning to the company. Okay, so that way it is very important. With Michelin approval, we will have our customers open to buy material in Europe and other parts of the world. So that way it is very, very important. So now we have got regular supply started to Michelin in India, and we are also talking to customers in Europe based on these approvals. On the capacity expansion, we are going ahead with our planned capacity expansion. Thailand will become 60,000 tons by end of November. We have got the environmental impact analysis report, and we are allowed to increase that capacity. Of course, the utilization in Thailand will be low because of we are exposed to customers who in turn export tires to Europe and America. So their demand has come down. They are not running at 100% capacity. That is the only single biggest reason for poor performance of Rajratan in Q2. Otherwise, Indian business is doing well. And going forward, long-term plan remains intact. We are, as I have been telling you in my previous interactions with you, that we plan to grow by 20% CAGR for in next 4 to 5 years. So I'm very confident about that.
And on the market share?
In India, our market share is close to 45-46%, and we don't anticipate a bigger market share. But this Chennai capacity is for the growing market of India. So whatever growth comes in, the tire, consumption or tire production, we are targeting that growth. And Chennai being the port-based location, we are also planning to export at least 50% of production from our Chennai facility.
Okay, just a quick last question then, sir.
Yeah.
Michelin is one of your clients. You are probably trying to get their business in the export markets as well. But
Yes.
any other big clients that you would, which are probably in your pipeline, which you are probably bidding orders for currently? If you could just leave us with any kind of estimate.
No, we are approved with all the tire companies in India. Michelin was the last one. We got approval. So now it is the question of bigger volume and to more locations of this plant. All these multinational companies have number of factories around the world. So right now we are approved with one factory of Michelin. We are approved with Bridgestone in India. Now we are targeting like from Thailand, much bigger volume in Thailand in the coming years, and also supplying to their Southeast Asian locations. And similarly, Michelin has a very big presence in Europe. So we have set up a marketing office in Europe, and now we are making efforts to get some share of the European market.
Okay. All right, so we're going to leave it on that note. Thanks very much for joining in and speaking to us. So that is Rajratan Wires, not that confident in terms of the export market, but definitely confident about the India business. They are expecting volumes to grow around 10% for India, and for the export business, which is basically from Thailand, they expect it to remain flat. Take a short break, but up next, we'll be connecting with the management of KEC International.